the doctor that can only prescribe medication from one drug company? Would you go to that doctor? Answer would be no. Would you work with an advisor that can only recommend product from one company? The answer would be no.
Welcome. This is the Broken Dealer Podcast. I'm your host, Daren Blonski, and we have Mr. Carmine Corino joining us as well. This is the our first Carmine podcast together on the Broken Dealer. We've written a book. If you haven't read the book, you can check that out on Amazon. But this is a podcast all about the ins and outs of how to become an independent advisor, things we learned along our journey, and we'll be bringing in other people to talk about their journey to going independent along the way as well. Carmine, anything you want to add to that?
No, man, I'm ready to get rocking and rolling, talking about really starting this podcast for the last 6-7 months. Excited that we've pulled the ripcord and we're ready to share our stories and our knowledge with the advisor community.
That's it, right? So everybody's got a story. As we know as advisors, stories sell and stories are important. And Carm, you want to go first and tell us your story today?
I can. So episode 1 today of our the Broken Dealer podcast is basically who the hell are these guys? So let's start with our journey. Right out of high school, let's start in the beginning. Right out of high school, I worked for the phone company here in New Jersey and fixing phone lines on the telephone poles and the manholes, and really got me prepared for my career in financial services. So stayed there till I was 23 years old. And
so wait, you see you got prepared for your career in financial services. What prepared you in your first job working for the phone company?
Dealing with nonsense.
What do you mean? Like the bureaucracies or the...
Yeah, I'll tell you, I was a union delegate the last 4 years I was there at the phone company. And that is really what got me to want to leave.
Bit the glutton for punishment, man.
It is a thankless job. And so I knew at that moment, looking behind the Iron Curtain, I said, well, this isn't for me long term, right? And everyone around me thought I was crazy. Like, you got a job at the phone company, you made it. Like, that's a 30-year gig. You get a pension, benefits. I mean, I was 21, 22 years old, making over 6 figures a year. You couldn't tell me anything was wrong with my job until you really started asking questions. And I'll tell you, there was an event. I met this gentleman at a dinner, and he said, hey, what do you do for a living? After we were talking for a few hours. And I said, I work for the phone company. And he says, the phone company? Man, I would have never thought. He goes, do you like it? I said, yeah, it's good. It's fun. And he said, well, where do you want to be in 10 years? What do you want to have? And I give him this laundry list of stuff. And he says, great, go to work tomorrow. Look at someone with 10 years more time. And that should be a pretty good indication where you'll be in 10 years. Okay. I go to work the next day. And I remember the first 2 people that I picked out. And I still remember them to this day. One was driving a car that I don't know how it ran with a rag in the gas tank. The other one's on his 3rd divorce with a raging alcohol problem. It was not a very good environment for me. So I said, oh, listen, this is no bueno. I need to start looking at options. And I had a friend in the financial services industry at the time.
Well, let me guess. It was a life insurance company.
Let's go with that, right? So he happens to work at a life insurance company. I shadowed a stockbroker. I shadowed a financial advisor. I took 2 separate days, and the stockbroker life was not for me. The financial advisor, meeting with clients, and that really got me. That I said, hey, this looks like the path. And I did what a lot of people did. I started at an insurance company in 2003 as a registered rep, licensed agent, became an advisor 2 years after. And I was there for 17 years. Right? And during those 17 years, there was that Chinese water torture of, well, this doesn't look right, but I'm comfortable. They're treating me okay. I'm making good money.
Let's go back real quick. So you said you're there for 17 years, right? So you walk in the door. Day 1, did they tell you to make a list of 100 friends and family that you could go sell a life insurance policy to?
Of course they did.
Of course they did.
Yeah. And that was very uncomfortable for me because I was 23?
Yeah.
All right. And then you had your natural market and things like that. But I know right at Jump Street, I knew I wanted to be an advisor. I knew I wanted to do financial planning.
Let me just interject a really important story, because I think that this will be important as we set context for this podcast and what we talk about. Like, what we're really hoping, this podcast, there's this old radio show host out in San Francisco, and I'm sure he was vindicated throughout the United States. And his name was Paul Harvey, right? And so Paul Harvey had come on, and it was like afternoon commute. He'd come on and be like, "This is the rest of the story with Paul Harvey." And so what we're really hoping to extract from this podcast is the rest of the story, right? It's so somebody's sitting out there unsuspecting, and they got a friend in the life insurance business. This would be a great opportunity for them to learn about, like, hey, here's what you can expect in that world, in that experience. Because it's the things they aren't going to tell you that are often so important in your career, and understanding what you're getting yourself into or not getting yourself into. And so that life insurance company that will not be named, I talked to a really successful other agent out here on the West Coast about the same time I started my business at a brokerage. And I was talking to him, and very successful. And I said, what's your secret to success? Like, most people, and I didn't start on the life insurance side. I started on the brokerage side. And so what's your secret to success? And he goes, well, you want to know the truth? And I was like, well, of course I want to know the truth. And he's like, well, my wife doesn't like me to tell this story. I'm like, well, I'm not asking your wife. What's the rest of the story? And he's like, well, here's the deal, man. Every year, hundreds of people started our firm. They come join the insurance company. We make a list of 100 friends and family, and 99% of those people are going to quit. But those 99% of people might sign up 5 people, and every time they quit, I have 5 new clients. And that's how I build my business. I call it bottom feeding. My wife doesn't like that term. And so anyway, I don't know if that was like your experience when you started.
Oh yeah.
But that is, and so many people, they go in there and they absolutely get rammed through a mill, and it's a miserable experience, and that they go on with life. But there's agents that have been there for a long time that then benefit from their failure.
Yeah. Oh, that was there. That was clear. I was kind of on a different path, was never a big insurance producer.
How did you make it in your early years if you weren't a big insurance producer? Because a lot of insurance companies don't allow you to do anything with bud insurance until you've proven your ability to sell insurance.
I was not a recipient of a book of business or anything, and I would say it was all grind. I did write a lot of insurance, and what I wasn't was insurance enthusiast. So these companies say, well, if someone wants to save for college, use a whole life policy. If someone needs to retire, use a whole life policy. It's we had a joke: if your knee hurts, rub a whole life policy on it, and you'll be just fine. I never subscribed to that because it didn't make sense to me.
Yeah.
So I was a guy before I was an advisor selling mutual funds, and people are like, well, why are you doing that? Because it's the right thing. I remember being in a training session in Dallas, Texas, where this insurance company had their training. And the conversation was about 15, 20 agents. There were agents, register reps, and advisors in this classroom. And the topic was, hey, if you have a client that needs to save for college, what do you do? Well, whole life, and you do this, you structure it this way, and variable life, you structure it this way, you do it this way. And I'll never forget, the moderator was a sales trainer in the Virginia area. I actually spoke to him a number of times after. And he said, Carmine, what do you do? And I looked around, I go, you get them the fund of 529 plan? And I'm like, why isn't anyone saying this? Daren, I got attacked. What if they get disabled? What if the market goes? And I got every single thing that a life insurance agent would tell you why you shouldn't use a 529, why you should use whole life insurance or whatever. So we go on break. I'm walking out. That trainer stops me and says, you're 100% right, by the way. And the reason why none of these people brought it up is because most of them are not licensed to do what you're doing. So I was different from Jump Street. I said I wanted to make an impact. I wanted the product to be secondary, get the client impact. I charged my first financial planning fee in 2005. I was 2 years in the business. My manager couldn't even support me at the time. He had no idea how to, because I just knew at that time, this is the way to really impact the client's outcome. It's not leading with product. It's leading with process and taking a holistic view and not just, jamming product down their throat. They would love for me to do it, but I never did it.
It's so fascinating that in your story that
Mm-hmm.
you were revolutionary. You were the outsider for not leading with product, right? And it's, it's fundamentally the client relationship. It's such a vulnerable relationship, right? These people come and they open their whole life to you.
Mm-hmm.
And the idea that product would lead in that dialogue is asinine, but that still is the standard in the industry. And I suspect now this is January 20th, 2025 when we're shooting this so that it stays evergreen. But this is the inauguration day for President Trump, which, not to get political, but the reality is we're likely to see less regulatory framework now, right? So Gensler's just leaving and he pushed in a lot of regulation. A lot of it was misguided, in my opinion, but he pushed in a lot. And, now we'll have less regulation. So you're going to see even more, I think, through this next 4 years, the triumph of product. And that's not saying that that's not necessarily a good thing, because I believe in a free market. But I think it's important that, the consumer beware with the way the industry's set up. And I think the advisor has the obligation to put themselves in the best position to serve the client relationship the best they can. And that's the whole essence of this podcast, right? That's why we're doing what we're doing. That's why we wrote the book, was to educate and to help people understand that there is a difference.
There's a big difference. Being on both sides now, I can have this conversation with someone at a wirehouse, at an insurance company, at an independent BDRIA, at an NDRA, whatever that conversation is, being on both sides, just like you, Daren, being on the brokerage side or the wirehouse side, right, and coming on to the independent side, and that's why we decided to write the book together, because we both bring those perspectives. I didn't have the wirehouse perspective. You didn't have the insurance company perspective. And those two channels is where I'd say a majority of the advisors come into the industry, right? And then they end up somewhere else, but they usually start those two paths. And funny, when I was going through, those first couple years, I wanted to be a CFP. That was something that I wanted from day one. And my manager said, no one's a CFP here. So there were 350 registered reps and agents in this office. There was one CFP.
Wow.
And he's like, why do you want to waste time? And in my head, I'm like, why wouldn't you want to learn and educate yourself and exhibit to your clients that you're willing to do the work to be the best version of yourself, to be able to give the best advice possible? Why? And to me, it was foreign. Why wouldn't anyone want it? So I went on my own path, got the CFP, became an advisor. But again, charged my first planning fee 2 years in the business. No one at the office knew how to process any of the paperwork. I had to drive to Manhattan, where their home office was, to literally deal with they owned an RIA, so I had to deal with the people there. And there was one person there, I still remember his name. He was a huge help. He's since retired. I had to deal with him, but I had to drive in Manhattan multiple times to get training and bring paperwork in and the planning check, because no one at that office knew. And I said, well, okay, I was told, and here's the difference, though. You and I spoke about this, and it's actually an assessment on our Join Cornerstone site where, hey, does your firm allow you to do this? Let's say you want to charge fees for planning. Does your firm allow you to do it? Yes. The next question is, do they support you? Because they can allow you to do it, but if they don't have the infrastructure or any type of support system, you're on your own, just like I was. There was one person. There was 13,000 insurance agents and registered reps and advisors, and there was one person doing financial planning internally.
Wow.
So it was very, so.
You were literally blazing trail then.
In order for them to open up your window to take the Series 65 is what you need to be an advisor. You had to do 2 years of certain production and core product. So that didn't mean much to me back then. I didn't know any better. I said, okay, I could do 2 years of this minimum production, then you'll open my window. I look back now and say, wait, in order for me to act in my client's best interest as a fiduciary, I have to do this amount of non-fiduciary salesperson work. Like back then, it didn't mean anything, but today I'm like, wow, I can't believe that's still allowed in the industry. But, that's what we're here to talk about. But
it's very commonplace. Like, I think the frameworks have changed over time. Like in the broker I started with, we had these things called diversification trips, where literally, like, you had to sell certain products in different buckets. And then you get to go on these fabulous trips all over the world that were just crazy for most of the brokers starting off. They didn't have that kind of wealth, and you're staying at the Ritz and those type of things. And so it was very like alluring. You go listen to some talks about, selling mutual funds for a couple hours and they call it a business trip. And that's very commonplace in the industry, less so now, but they've found ways around that. But it was interesting at the time. Like, you literally had to find clients to sell each of the categories. So it wasn't about like what's doing, but at the same time that was saying do what's right by the client, you had to hit the categories. So, as Charlie Munger says, show me the incentives and I'll show you the outcome.
That's right. Let's go back to that Chinese water torture, those drips. This was a big drip for me. I wanted to hang a sign in my office. I had an office outside of their office. So we were detached, operating under DBA. And it said clients' needs above all else, right? Pretty standard and almost understood that that's what advisors did. And I was a CFP. So you talk about, fiduciary times 10, right? The compliance department at this insurance company wouldn't allow me to do it because it denoted that we always act in client's best interest. And I said, well, that's a big drip. When we built out our new office, this big sign went up above the door, clients needs above all else. And I get to look at it every day. So that was one of the benefits of actually exiting that environment and creating our own, which the focus is client impact, not revenue, not policies, not any of that stuff. It's client impact. And so operating that environment for that many years, drips were happening. I was on their advisory board of their RIA. And I just told the story in another podcast that in any other firm, any other wealth management firm, RIA, brokerage, they would rate effectiveness based on how much money came in the platform, right? We would think that's common sense, right? The effectiveness of this RIA owned by this insurance company was how much money left the platform to fund their core products. Yes. So we would be sitting in these meetings and go, we had a great year, 300 million left the platform and funded annuities, or, 800 million left to fund life insurance. But the RIA ran negative. It was a negative proposition as a cash flow perspective to the insurance company, but it was a feeder to their core product, which they were highly profitable. Now, let's caveat aside, they're an insurance company. They manufacture product. They use their agents, register reps, and advisors to sell it to the public. Great. But when it comes to someone like you and I that say, look, we really want to act in the highest standard, in the highest regard to clients, you can't operate like that in that environment because it's a huge conflict of interest. So those drips kept on happening.
Let me ask a question about that point in your career where so many advisors go through this experience and it doesn't bother them. Why did it bother you? Like, what at the core, what was it tapping on for you? Why did it really, why was it an issue, right? Because there's thousands of people who go through it and it doesn't bother them. They're completely fine with it. But why did it bother you?
To this day, I still take a fiduciary standard or act in the client's best interest. That's a very important thing to me. Still is today. And it always was.
Why?
Do unto others, right? I use this comment all the time. If you were working with a doctor that can only prescribe medication from one drug company, would you go to that doctor? Answer would be no. Would you work with an advisor that can only recommend product from one company? The answer would be no. I would want, even if that advisor knew the best solution was somewhere else that they couldn't offer you, they're going to try and fit you into the product that they're able to do and be able to hit the bogey, whatever bogey that client set. The company setting what my expectations as an advisor were bothered me because it forced me to work with clients that I probably shouldn't work with. Like if, we had 1 year to do that production and I wanted financial planning clients and asset management clients, but I got to go run out and write a term policy to check that box so I could be good in their eyes, maintain my payout, maintain my affiliation, maintain my benefits for me and my family. So the deck is stacked in that environment where you're forced to work with clients that you don't want to work with as a what they call you as a business owner, which you're not. But I would have to in order to check their box. because they think, hey, you're swell as long as you do this. And I spoke at all their top producer events. I even trained new advisor training seminars for them. I was very grateful. And up until I left, I didn't really have a problem with them. I understood why they didn't allow me the autonomy to be able to operate the way I wanted to, because they're an insurance company, and that's fine. But it just didn't feel right to me. It's if I was picking an advisor, would I choose an insurance company advisor knowing the industry? Never. I never would. I would want a completely independent fee-only advisor. That's who I would pick, because I want complete transparency, no conflicts of interest.
So did you have a moment where, the crescendo moment where it was like, oh, I'm on the wrong path?
It happened in 2017, and then the RIA said they were going to change a lot of things for the top 10 or 15, and I was in that space where I would be affected positively. They said they were going to make it, because all their compliance regulations were geared to the lowest common denominator, the person just got licensed, not me being in business for, at that time, 15 years. So their solution came out in the beginning of 19, and it was really no different than what we had. So that was a big drip. I'm like, all right, well, I need to really consider this now in the next couple years. And then in July of 19 was the big drip, was when the pipe burst. We had I had a team. I had multiple advisors in my DBA, and if I maintained a certain amount of their core production in their core product a year, I would maintain my payout, and my team would maintain their payout. They would get my payout. So it was like a teaming kind of thing.
You had to maintain a certain production level in their core product, or your payout and all your other business went down.
Yes, correct. But they afforded me the opportunity for advisors I brought in, and I had several at that time. They can get my payout, which if they were solo, they would never get it. So my ability, my responsibility to hit that minimum not only affected me, affected my team. So it was a very low bar. The good thing is this company didn't have reprehensible products for the most part. So I was okay with recommending them when a client had a need. So it was a very low number. Very manageable. I didn't have to trade my integrity to check their box. So for a number of years, it was, all right, I don't love it, but I'm not forcing any product on clients. So it was that middle ground. And then in July of 19, 2 days before leaving on a 19-day safari with my family, they went and 4X'd that number. And that was when the pipe burst. I'm like, all right, I'm out. See ya. And the moment I landed from my trip in Africa, me and my team went to work, and that was in July of 19. Our exit was supposed to be March of 2020. Timing was never the best, my strong suit. We had a delay till May, but so May 4th of 2020 is when the insurance company filed a FINRA action, and it was 16 months of...
For what?
So I had an agreement with the insurance company. If I left, there's not a problem with me leaving. If anyone came with me, then they had some legal clawback. When these two advisors came with me, now I could have left them at the insurance company, but I don't leave a man behind. I mean, these two people started their career with me, and I was not going to let them sit for 2 years in a day and then come. They threatened me with lawsuits multiple times when I told them. I was very open and transparent. They knew almost a year in advance. About 8 or 9 months in advance. Everyone knew. My manager, the second in command, the CEO of the RA, everyone knew. I was open with all of them. And then the two advisors came with me, and they filed the FINRA action. 16 months of going back and forth with them, and wound up settling a week before arbitration. And it was the best thing that ever happened. And if I represent, and this is something I want to make clear to everyone, it's in the book, if I represent worst case scenario from leaving a firm, then that should not be a fear of anyone, because I just not survive, I thrived. And I wouldn't change a single thing, even though it cost me money and time. It was a huge distraction. I wouldn't change a thing. So today we're 4.5 years in. Oh, I'm sorry, we'll be 5 years in May. So we're coming up on 5 years, and 11 advisors in 5 states and growing. We have a number of great teams joining us this year, and we have a great staffing team here in New Jersey. And here we are today. Now that's my story. Very truncated version. There's a lot of details, and we don't have a 3-hour podcast to fill today, but Daren has a similar story. Love to hear you tell it and walk us through. And that'll be on our next episode here at the Broken Dealer Podcast.
And for all the listeners, as we go through this, we're going to go back to that story, right? Carm shared his story at a very high level, and we're going to tease out core elements. Along the podcast, we'll be dealing with each of the elements that popped up during that choice to go independent. Thanks for joining us.
Thank you for listening to Broken Dealer. Click the follow button to be notified when new episodes become available. Visit our website at www.brokendealer.com. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Carmine Corino and Daren Blonski. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Fermata Advisors, LLC, DBA Sonoma Wealth Advisors, LLC, and Cornerstone Planning Group are both independent registered investment advisors and are non-affiliated entities. The opinions expressed by Daren Blonski and Carmine Corino on this show are their own and do not reflect the opinions of Sonoma Wealth Advisors, LLC, and Cornerstone Planning Group. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and is not intended to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.